Our next panel is TradFi to DeFi. The future of finance is decentralized. Please welcome the moderator, Claire Brownell from The Logic.
Test.
All right. Hello, everyone. Thank you so much to the Futurist Conference for having us. I'm Claire Brownell. I am the Future of Finance reporter at The Logic. So that means I cover everything to do with the intersection of tech and finance. I've also been covering crypto since 2016 in various capacities. Really excited to get into this topic today, which is one of my favorite things to talk about when it comes to crypto, which is basically, could crypto, DeFi infrastructure, and digital assets actually replace traditional finance? This has been the promise of it, since Satoshi invented Bitcoin, that we could actually, come up with a completely separate system to the traditional financial one. And if we could do that, would we want to? Would that be a good thing to do? Or would it be better if crypto and mainstream finance were integrated and worked together? So I have a great panel of people to come and talk about this topic with me today. And I'm hoping that you can all maybe tell everybody just a little bit about what you do before we get started. So Wesley, do you want to start?
Yeah, I'm Wesley Crook, CEO of FP Block. We are an engineering house that builds DeFi products for our clients globally.
Hello, my name is Chen. I run the sales team at BitGo. BitGo is one of the blue chip OG companies in the space. We do infrastructure for digital assets, everything from wallets to custody to staking, everything you can think of. We have something here for you.
Hello, I'm Paul Brody. I'm the global blockchain leader at EY, the firm formerly known as Ernst & Young. We do the traditional things that consulting firms do, professional services, tax, audit. We also build blockchain infrastructure primarily on Ethereum, including our layer 2 privacy network Nightfall. And then in my free time, I am the chairman of the Enterprise Ethereum Alliance, which all of you should join.
Hi everyone, my name is Mike Silagadze. I'm founder and CEO of ether.fi. ether.fi is one of the largest DeFi projects in all of crypto, with about 7 billion in deposits and hundreds of thousands of users. And what we're doing is we're building a DeFi bank. So think like Revolut or I guess like Wealthsimple for us Canadians, but crypto native on chain.
Okay, great, thank you. So I'm going to start with something that's pretty basic, but something that you can often, I think, forget about. It's a question that I often get from people who don't necessarily know a lot about crypto, and it's just, what is the point of it? What is it, what can we do with crypto and DeFi that we can't do with the traditional banking system? I think most of us in Canada, are lucky enough that most of us have bank accounts. We might think that, everything's working for us pretty well. What could crypto and DeFi do that we can't already do with traditional banking? So I was thinking, Wesley, do you want to start by getting into that question?
Yeah, I think the two biggest things is 7x24 settlement. You can run 24/7, where traditional finance has set times where they close the exchanges. Being able to be transparent with what's going on within the chains and everything like that. Those are the two biggest things. There's other program, the ability to program, all those things. But those are kind of the two biggest things in my opinion.
Okay, great, fantastic. And Chen, I'm curious what you think are the biggest things that...
Look, the barrier to entry in terms of DeFi is significantly lower compared to traditional finance. Anybody on Earth with an internet connection can download any number of these wallets, and with a couple clicks, get into any number of markets that exist within various blockchains. It's that simple.
Great, okay, thanks. And so now I want to get into, on the other hand, we haven't had mainstream adoption of, the use of DeFi. There's a lot of adoption of crypto, but mostly for sort of like trading and speculative purposes. So I'm curious, Paul, why don't you tell us, what can traditional finance do that crypto has so far found hard to replicate, and why?
So traditional finance, they have a magical superpower, which is they know the rest of you off-chain. As a business, as an individual, they have an understanding of kind of your full cash flows and assets. Right now, almost all of DeFi is really algorithmic, and it just looks at this world of your on-chain assets, or even very specifically, what you might pledge. I think that will expand over time, but for the moment, the TradFi players have a very specific advantage, which is they can take a lot more data sources into account, and therefore they can make some more nuanced judgments about risk, and they can do those things, and they can make bets on participants that sort of DeFi ecosystems cannot do. So they have that advantage. For how long, I'm not sure, but at the moment it's very clearly their play.
Okay, that's a really interesting answer. Mike, I'm curious what you think. What are the advantages that the traditional finance system has that's made it hard for crypto and DeFi to like really break into something that mainstream people are using?
Well, the big advantage is they're really good at screwing their customers and charging huge fees and making those fees obscure so that you can't really see where they're coming from.
I believe they prefer to call that monetizing the relationship.
Yeah, monetizing everybody in this room. But in all seriousness, the average person pays somewhere from thousands to tens of thousands of dollars a year in fees to their financial services, oftentimes without even realizing it. In other words, you're paying these fees either through interest that you're giving up on your deposits, fees on your investments, 3 to 5% on your credit card, foreign exchange, mortgage, et cetera, and all of that adds up, and all of that gets absorbed. I mean, this is why finance is whatever it is. I think 15%, 20% of the economy. And the reason that to answer the question more seriously, the reason they're able to do that is because they're entrenched, usually with a regulatory moat that prevents people, and this is especially true in Canada, that prevents other competitors from entering into the space. And that has some advantages with it, right? If you want to plug into the Interact network, you can't. So what that leads to is banks being able to create these walled gardens and channels amongst themselves that do create a good user experience for a lot of their customers, but at the cost of being able to absolutely fleece most of them.
Okay, good answer. So something that we're starting to see, capitalism famously really great at absorbing threats, and we're starting to see, Wall Street giants starting to launch funds on Ethereum, and there being a lot more integration of sort of the two worlds when there used to be really, a big wall between them without a lot of integration. So I'm curious, Paul, I'd like to hear from you on what you think. What are the upsides of starting to see more integration and blurry lines between the traditional finance world and the crypto world?
So we are going to see, so DeFi is orders of magnitude in many ways more operationally efficient than the traditional finance world. We are seeing kind of very big, DeFi lets you basically take money Legos and operate them as a small piece of a bank and move them around. So DeFi is going to enable a lot more flexibility, much lower operating costs, a lot of liquidity between your choices of specific functions. Traditional banks tend to be quite vertically integrated, so they have a relationship and they are kind of maximizing the value of that relationship across a bunch of stuff, some of which they're exceptionally good at and some of which they're not always very good at. I think what we can expect to see in the coming years is much more selectivity by customers. They're going to go with the participant that creates value in a very specific area. One thing they're all going to need, that everyone's always going to need though, is an on-ramp between TradFi and DeFi. That's going to be a particularly important spot where existing TradFi players especially are well positioned, because at the end of the day, no matter what you do in DeFi or TradFi, you need this mechanism for going back and forth.
Great, okay, interesting. Yeah, Wesley, I'm curious, what do you think, what's the upsides of seeing more integration and blurry lines between the crypto world and the traditional finance world?
I think you'll get being able to serve underprivileged banking systems in the world, Africa, Middle East, some of the places that don't have solid financial systems like the US, Canada. I think the upside will allow for broader market appeal for people. They can choose who they want to play with. They can see who they want to play with. They can see who's playing with them, and they can kind of keep the traditional finance guys at bay, as keep them honest. If you are familiar with the U.S. markets and Citadel and the way they manage 80% of the retail trades, they're taking a 2% hit or 2-cent hit every time a trade's done. That's taking money out of the consumer's pocket. We got to take that away from them and give it back to the consumers.
Yeah. Okay. Interesting.
Citadel is now awake. They're definitely getting into this game.
They know
Last
where the
I
money is. They follow the money.
Yes.
Okay, great. Yeah. So speaking of, as Mike was making the point that banks are, they're in it to make money. They're in it to charge fees. They're not in it to, change the world necessarily and bring about a financial revolution. Quite the opposite, in fact. So I'm curious if, Chen, do you think what are the downsides potentially of having more integration of traditional finance and crypto? Is there a risk of, losing some of the sort of, principles like censorship resistance, privacy, if you get a lot of banks involved?
So look, like one of the other big pros of quote unquote using traditional finance is for your protection, for your safety, right? There's a lot of AML, KYC, a lot of red tape that has been installed in traditional finance, again, for consumer protection reasons. Of course, we need some of it to ensure that actual bad actors are excluded from said activity within DeFi. But if you bring over that entire framework into DeFi, you're naturally going to kill one of the core tenets of decentralization and core tenets of crypto. So there has to be some balance between the two.
Okay, interesting. So Mike, I'm really interested to hear from you because your company ether.fi is actively working to make it possible for people to do traditional, bank-like services, things that we would traditionally associate with a bank, but on DeFi rails with crypto in the back end. So I know you're adding services like payroll, bill payments, and you're hoping to make financial freedom accessible to everyone is a quote I've seen you use. So tell me, first of all, how does that work? And why? Why would somebody, people can pay bills, they can get their payroll deposit already into their bank account. Why should somebody use your product instead?
Yeah, so I think the best way to look at that is if ether.fi was a financial institution, which we're not deposit taking, ether.fi is non-custodial, it is a decentralized application. Hopefully whoever fell is okay. So we're non-custodial, we're a decentralized finance application. But if we were a traditional fintech, if we were a custodial institution, based on our deposit size, we'd be a top 150 institution in the US. So we'd be actually one of the larger financial institutions, at about 7 billion in deposits. If we were that kind of institution, we would probably have about 300 to 400 employees. We would have revenues of $150 to $200 million a year, which means we would charge users $150 to $200 million a year. And there would be a ton of overhead that we would need to operate under. Because we get a lot of stuff for free by building on a smart contract platform and by not having to take user deposits, by being non-custodial, basically you take all those numbers and you reduce them by 90%. So we have 25 employees, we're closer to 40 million in revenues, which basically means that everything a user does on ether.fi, whether that's holding their assets and using it like a savings account, or deploying their assets and investing them in DeFi, or using the credit card to spend it in day-to-day life, we don't have to charge them as many fees. We can pass on much more of the revenue that their assets generate over to the user. So that's the advantage. Basically, the building on-chain in DeFi is structurally more efficient by an order of magnitude. And ultimately, that manifests itself in a lot of different ways, but ultimately that's what's going to drive a lot of adoption. But the limiting factor so far, up until I would say really almost like 6 months ago, is the user experience that we would need to have in order to facilitate these features was horrendous, right? For anybody that's used DeFi here, you know what I'm talking about, dealing with seed phrases and hardware wallets and North Koreans hiding in every behind every corner. It wasn't something that was viable for the average user. But I genuinely think that within the next 6 to 12 months, there will be a massive influx of actual users that are using DeFi not for just gambling purposes, but for actual day-to-day life that will substantially re-platform a lot of finance onto DeFi.
Speculation is a real use case.
Well, right now, yeah, but I really think over time speculation becomes a rounding error. I mean, that's the only reason I'm in this space.
Yeah, that leads into the next question that I wanted to ask, and why don't I ask you, Chen, is just why is that right now DeFi, it's, mostly, as Mike, I've heard you say that in previous panels, that is mostly sort of a playground for a handful of rich people gambling, right? Like, if we're being honest, that's who's mostly using it at this point. So is there, what can we do? Mike talked a little bit about improving user experience, but what would have to be done in order for it to go from that to something that people are actually using in everyday life?
I would argue we've come a long way as an industry. Bitcoin's been around for over 10 years, Ethereum close to 10 years. And the first versions of DeFi, first versions of these L1s simply didn't work, right? Remember the CryptoKitties crash from a long time back? Literally, JPEGs brought down the entire infrastructure. If you look at what happened recently on certain networks like Solana, look, the thing has improved significantly over the last couple years. And if you look at the first use case, which is speculation, yes, we've built the world's largest online casino. But yes, that's actually a use case. That's actually a use case. I would argue the second use case, which is very real, is payments and stablecoins, right? Without the underlying technology, that's also used for speculation, you won't have this other use case as well for stablecoins and payments. Think about all the remittance that happens between countries any given day, any given year. We're talking boatloads of money. Think about the process that currently exists underneath via these various banking systems. It's time to replace those systems, in my opinion, with some of the technologies that we've built within this industry. So these are just like two quote-unquote initial use cases that I think we should all be very proud of. I think over time, given another 10 years, there's going to be a lot more use cases on the same tech.
I think one of the biggest challenges we have is lack of trust in this space. You hear of all the rug pulls, you hear of all the stuff going on out there, and the user base in traditional retail is not going to buy into that. We have to build systems that will allow trust to be put into the space. We got to simplify. We have way too much of a complicated environment to play in. If we can't get grandma and grandpa onto these systems with a push of a button on their phone, we're going nowhere. We're trading amongst ourselves, we're playing amongst ourselves in this ecosystem. We have to get out of that. And then the other piece of it is to bring TradFi into this space, they want to control. So once they figure out how to control and make money, they'll be coming in full bolt. And there'll be trillions of dollars flowing that way. The payment systems, the trading systems, all those things will start flowing and merging together. Until then, we got to clean up our act, so to speak, in this space and get all the noise out, get all the hype out, get all the bad actors out that we can before we can really take off.
Okay, thanks. Paul, yeah, I'm curious what you think. There has, crypto has a bit of a reputation problem, as we were just discussing, to deal with. So does traditional banking, but they do also have, they have hundreds of years of operating under their belt. They have the entire, structure of the government and central banks backing them. Would we need the backing, the trust of the traditional financial system, to behind DeFi and crypto, or could people, would they adopt it without that backing it?
So I think the widespread adoption of crypto payments, DeFi, is pretty much a given at this point. Last year, EY became the first company to get a B2B payment from PayPal using PYUSD. We did it in cooperation with PayPal, SAP, and Coinbase. And this fully automated payment was a big milestone because we had the ability to kind of, from from within PayPal's ERP system, they indicated they wanted to pay an EY invoice, and they did that, it went through crypto rails directly into our Coinbase institutional account, and it showed up in our system as cash paid against an invoice. Now, that's really revolutionary because although we've been taking crypto payments for years, this was the first time we had one that was fully automated. And to give you a sense of what this is worth to us, we estimate that if we could change all of our traditional banking payments to crypto rails payments, we could save $100 million a year. That's no joke. That's the kind of money that enterprises drive adoption, that gets the business cases built, and it depends on a bunch of infrastructure being put in place. It's now there, and both on the consumer and the enterprise side, we are approaching a point, I think we will be there in the next 6 to 9 months, where from an operational standpoint, it is, for all practical purposes, hard to tell the difference between TradFi and DeFi, and people will choose based on the optimal logistics and pricing for their business, and they won't really worry about like which is which.
So the payment processors will make $100 million less? Who will make $100 million less?
So basically anybody whose business is built on like traditional transaction processing fees, it's going to be, honestly, it's going to be a bloodbath. DeFi is an order of magnitude more efficient. The analogy I often give to some of our banking clients is that DeFi is going to do to TradFi what voice over IP did to traditional telephony. They're going to take things that we used to pay for and turn them into something that is so close to being free as if for all practical purposes it nearly is.
Great. Okay, interesting. So yeah, I'm curious what we think comes next, because it's been, I think has it been 5 years since the DeFi summer, which happened right before I started this job at the Logic, and I'm very jealous that I did not get to cover it because it sounds like it was a very exciting and fun time. But yeah, since then, there's been interesting stuff happening. AI agents in crypto are really interesting, but there's also been a lot of nonsense, a lot of meme coins, a lot of more scams. I'm curious, what's going to be the next big thing? Will there be another DeFi summer? I'm curious, Mike, what do you think about that?
Yeah, so I mean, the thing I'm most excited about is the emergence of this new category that I think we're going to be hearing a lot more about, called DeFi banks, which is these non-custodial end-to-end banking alternatives. I think we see a number of folks already speaking that kind of language, entering into the space, not just ether.fi, but MetaMask is talking about that kind of structure. Manto is another one. I think they actually bought a bank to be able to bridge that last mile. I think within a year, we're going to see probably a dozen different companies enter this category, including TradFi institutions going from TradFi down to DeFi, as well as DeFi native institutions, companies doing that last mile connection to TradFi rails. I mean, this is a $150 billion space just in the neobanking category that's growing at 30-40% a year. This makes all the speculative gambling bullshit a rounding error. If you look at all of the revenue of DeFi today combined, in aggregate, it's around $1 billion in revenue that all of DeFi generates. That's like one small to mid-size B2B SaaS bullshit company. Some random help desk software company generates more revenue than that. So the opportunity here is to 100x, 1000x the entire DeFi category just by expanding into actual real world use cases and going outside of the sort of DeFi bubble.
Right. Very briefly, I would just say, we know from looking at other industries that when you enter this mainstream adoption phase, you typically get about 20 years of 25 to 35% a year growth. So that is what we can expect for like the next literally 20 years in this space. It's not going to happen overnight. Adoption takes time, but it's going to be pretty consistent for a very long period of time.
Okay. All right. Well, thanks so much, everybody. I hope you're right, just because that'll be really interesting for me to watch and cover, as well as for any other reason. So thank you so much to my panelists, and I hope everybody enjoys the rest of Futurist and Consensus.
Thank you.
Thank you very much.
So sweet to me. This is where I wanna be.